Hey guys, what's up? Stock Retail coming to you again on a lovely Friday. Hope it was a great week for you, and I hope it's going to be a great weekend. Was for me, although I'm a little tired. Um, just a little tongue in cheek on this graphic here. Kind of date myself a little as a dad and all that. But I didn't even know what this song was till a couple weeks ago, so I was just kind of laughing about that. But hey, it's Friday, so let's enjoy. What are we going to cover today? Going to go through something I've noticed whenever we feel like we're close to any kind of a run, and I don't know if we are or not. I don't mean to provide any hopium, but at least when things get spicy, and certainly with like say Costa Barro and some other things, and the amount shorted, AMC is looking what I'll call spicy. Um, we often start to see various distractions, whether that's negativity, whether that's other runners, a lot of things coming at us on Twitter. So I'm just going to talk about kind of what's the state of affairs, hit a couple of highlights from the week, and then we've seen this Genius stock. Boy, that's spreading all over, and people are talking a lot about that. So I took the time to do a little bit of DD. I like to share DD with you guys, what I'm seeing. I'm going to share both fact and opinion today. And so, I talk a lot on this channel about not trusting bros. So I'm not going to ask you to trust me, and I'm in fact going to ask you to question me and question anybody else you're hearing. But I'll also try to separate where am I sharing fact versus where am I sharing opinion. And as always, I'll source a couple things too. All right. So first of all, on AMC, great week, up 9%. On APE, greater week, up almost 15%. So nice to see some green in our portfolios. Hope that you all got to enjoy that. Um, Pretty important to highlight just how big the options chain was this week. So if you don't know, look up something called January leaps. There's kind of a spot in the middle of January every year where there's sort of yearly options. Like right now, there's already an options chain sitting out in January 2024. In fact, you could even go farther than that. Um, and those end up being a really, really big week. And there's a reason I'm highlighting that I'm going to come back to. So just hold that thought. Cost to borrow, super high. So you can see, maybe you've seen from me or from some other apes, brokers are offering retail upwards of 50%. My broker, it's 49%, so I've just kind of rounded up there, but basically 50% that they're offering us, and that's daily. So, as for me, I've shared with you, I don't want to loan my shares out for us to be short attacked. That's just not something I'm interested in. Feel one friend of mine even said, that, hey, that's kind of like a deal with the devil. But geez, they want our shares and they're trying to pry those away. Imagine the cash, that's going out the door from Shorty daily. And I want to hold that thought too because that's going to be important. Interactive Brokers is showing 122% cost to borrow. So I guess the difference, just to share with you, so the brokers are offering us retail a percentage, kind of a commission almost, on if we'll loan our shares, but that's our cut. So then the broker's keeping their cut too. So that's why the difference between this like 50% and the 122. Or Ortex looks a little different because they look at a host of loaning institutions, and so they do an average. So I'm showing that average cost to borrow of 246%. By the way, super random kind of nerdy note. You notice how like there's 46 here and 64 here, so the max is 264, the average is 246. Anytime you transpose numbers, like if you flip 64 to 46, the difference between those numbers is always divisible by 3. You can fact check me on that. That's just a little bit of nerdery for you. So the other thing we saw, that I want to hit, and then I'm going to kind of come back to these AMC numbers. Fake news spreads fast, and someone who probably meant well, so I'm not even highlighting who it was. I'm not trying to go after somebody here. Somebody shared basically some Antara transactions and showed like, oh my gosh, look at all these that they sold. Um, it basically adds up in their mind to 123 million shares that they sold. How did they short so many? Blah blah blah. Well, actually, you click in there and you read a little deeper and you realize like it's probably tiny on your screen, but you can see these little blue and white lines. A bunch of these lines were actually buys, not sells, and so you can't add them all up. And so what I did is I just honestly took the time to plug it all into Excel, and then just anywhere it was a sell, I kind of called that a minus number, and anywhere it was a buy, I said that's a plus. It actually comes out to Antara buying a net of 1.8 million shares. It was not 123 million sold, it was 1.8 bought. Now, let's clarify a couple things. In no way am I saying this is not worth DD. It probably actually is. Why is Antara having a whole bunch of sells and buys? Why are they trading so actively? There's some really big numbers in here, you'll see. it's 123 million, sort of, if I call it absolute value of shares, that adds up to 1.8 million total net buys. But so that's a lot of shares going back and forth with Antara's name on them. So I'm not at all saying brush this aside, don't pay attention to this. It's interesting and probably deserves some DD. But um, nonetheless, it's not what was said, and I just want to make sure that we kind of have a right understanding of that. Um, so that's why I wanted to cover that. Speaking of right understanding, let's come back to those options. So, and here I'll kind of share a point of view. Uh, the fact that the options chain was so big, if you looked, you could see that, like, say, if we had gotten to $6, if we'd gotten to 7, 8, 9, 10, there start to be hundreds of thousands of contracts that could have been in the money. And think about, if you were the one who had sold those, or if you're the market maker who's going to have to pay up on those, um, hundreds of thousands of options, which are worth 100 shares each, uh, in the money, would have cost an insane amount of money. And potentially, I could see, people talk about a gamma squeeze and all that. Could we have run like crazy, and delta hedging? If things had started to be in the money, it could have gotten really, really crazy today. And obviously, some of us wish it would have. But I'll be honest, I had a conversation with some friends, and they were kind of saying, geez, with this level of cost to borrow and the amount of cash that's burning for shorty, why would they ever agree to that? And one thought I had was those market makers and any option sellers. If you let's just make up numbers for fun right now. So let's say you knew if all these options go in the money, I'm gonna foot like a $500 million bill, or I could run up basically a $2 million bill on a credit card with this cost to borrow. You're going to choose the $2 million bill over the $500 million bill. So what I'm suggesting, obviously, it's a little bit of conspiracy theory. I'm not proving this or fact, sort of sourcing this, but I'm kind of wondering if basically the price was suppressed to keep a lot of options out of the money, to avoid a rather significant hit for some big players. Sucks if that's true. I don't like the fact that we have a manipulated market. That's something all of us apes want to see changed. And again, I'm not saying I can prove that. I'm just saying that's my point of view. But either way, definitely was interesting to watch the options chain today. And certainly cost to borrow is burning a lot of money for the shorts, which that's why I'm kind of saying makes things a little spicy for us. So let's take a minute and start to talk about GNS. So first off, let's remember this cost to borrow, right? This crazy high cost to borrow. Also, by the way, there's some big options chains coming in February and March as well. A lot of options are still in the money in general. And why I highlight that, you know, at a time when AMC is getting kind of what I'll call a little bit squeezy, there's no hopium there, there's no promise. I'm not suggesting it's going to squeeze. I'm just saying the metrics certainly say things are tight for shorty. They're having a hard time finding shares to borrow. They're offering us a lot of money to borrow them. They're burning their cash daily. If I was on the short side, at some point you're like, I can't keep burning this cash. I've got to cover some of my position. Um, so that feels squeezy to me. That's why I'm saying that. That's at least based on data. Um, and then suddenly at that time, we start seeing some things pop up. So when that happens, I'm like, what is this? I want to do DD. And then frankly, too, I've got a rule of thumb with investing that I don't invest in something if I don't know what they do and I don't know how they can make money. So if I'm going to look at a play at all, I want to understand it. I was the same with HKD last year. If you guys remember that one ran some crazy, crazy percents. And I went and researched and was laughing with some friends because essentially, if I boiled down the DD on HKD after I went through their website and looked at their business, I told some friends, I was like, basically, all I can tell that they say they do is we do digital stuff in Asia. And it's like, come on, you got to have a little more well defined business than that before I'm giving you my money. And here's the key, guys. Whether you're a technical person and you're just analyzing charts, whether you're, let's say, a fundamentals or a business person, and you're investing in a thesis, if you're going to throw your money into something, there's a lot of people who'd love to catch it and never throw it back. So that's why we do DD. We want to understand, why am I putting money into a play? Do I understand this play? Do I have a thesis on how I'm going to make money on this? So I'm doing a little DD here, and I'm going to just share it with you for free. So here's some things I found about GNS. I call this a cursory search. That just means I didn't go, super, super deep, But I took the time to review some financials. I'm going to show you that. I'm going to source that too and give some links on that. Um, and I took the time to kind of go through their websites and go through some of their press releases and stuff like that. So first off, they're a Singapore company. They are not a U.S. company, so you'll see a slightly different filing. It's called a 6K. A lot of times we talk about like an 8K, or we'll talk about a 10Q and a 10K. Um, this is a 6K that they filed, which I'm going to link for you. It was recently IPO'd. Why does that matter? So there's some financial wisdom out there that says, in general, the first year of an IPO, tread lightly, tread carefully, because you don't even know how that stock is going to trade, what the right valuation is. So we're not even a year yet into their IPO. So I just thought that mattered to me, at least. Um, Recently, they purchased a group called Revealed Films. I went and found that website. Link that for you also, and kind of see who they are, what they do. They're a pretty small company, by the way, but genius. So we're going to talk here in millions, not billions, in a minute when I look at the finances. The other thing that I think is worth noting, they're only 2% short. So compared to AMC at 22% short, and usually you don't say a company's really kind of heavily shorted until they get into the double digits. So only 2% short. I thought, well, that's interesting, especially since people are talking about this as a short squeeze. And then think about if they're only 2% short, plus the CEO owns almost half of the shares, and insiders and institutions pretty much own the rest. Um, that feels to me, well, actually, here, let me back up. Let me describe, you've heard of Zach Morris, Atlas, they're kind of in a trial right now at a super, super high level without getting into details. Their whole kind of trading model was they went after what I'll call illiquid floats. It's easier to do a pump and dump on something when the shares aren't easily traded. It's not super liquid. If you come in fast with some buys, that stock could start flying up because the market makers and the exchanges can't find the shares super quickly. If the CEO owns almost half the shares, take that right out of sort of the exchanges right then and there. I mean, unless he's actively trading. Uh, and if the insiders and institutions own the rest, that's not a very liquid float. So I'm just going to be real. Now I'm saying point of view. This smells a lot like a pump and dump to me. Um, so I don't know. Tread lightly, tread carefully. But let's not stop there. Let's actually go into some more data. But I just want to highlight, if you're 2% short, it's a little hard for me to call that a short squeeze. I'm not sure, how you back that up with data. But yeah, let's just keep going and look at some data. So first off, I wanted to see what they did, and the first thing that caught my eye, I was like, whoa, their pro forma. If you don't know, pro forma means kind of like a look ahead. Um, Not literally. I'm not translating that literally, but it's sort of it's guidance they're giving on their future business. So by the end of 2022, they're saying they were going to have 4 million students. Um, how is this a forward-looking statement if I'm talking about the past? Well, the last filing they had was from September 30th. They haven't done their annual filing yet, and neither is AMC. Like, this is early in the year. You don't get annual filings this early. So as of September 30th, they were saying that by the end of 2022, they were going to have this 4.5 million students. And I thought, whoa, that sounds like a really big number. So I went and looked at, what's the largest university? You can kind of see literally with my Google, how many students at largest U.S. university? Well, 66,000 students at the University of Central Florida. At least Google search tells me uh, that is the largest university here. So I'm sitting here going, holy cow, how do you have 4.5 million students and the largest institution in America is 66,000 students? Let me back up. Why am I talking students? What I also found on this website is they claim to be basically like a digital educational space for entrepreneurs. So I'm thinking it reads like they've got a lot of classes, like maybe you would go and you would pay to have classes on doing your side hustles or creating a business. And we're going to talk more about that. In fact, let's go right there. So I'm sitting here going, all right, so what's their business model? How do they make money? I mentioned I don't invest in something if I can't explain what they do and why what they do is going to make them money. Otherwise, like I said, I don't want to throw my money and not have it, have someone catch it and not throw it back. So um, at that time, so as of September 30th, you can see on September 30th, they had 3 million students. This is from their filing, by the way, which again, I'm going to source. So this is not a trust me bro at all. I'll give you the source on this. So they had these 3 million students, but look at this, only 40,000 basically, a tiny percent, only 40,000 of their students were actually paying students. So then I was like, oh, I got what you're doing. And we're going to come back to that, but let me keep going first. And then of those, a total of only basically 10, or if you want to round up and call that 11,000, had upgraded to become faculty or partners. So let's pick this out first, or pick this apart. First off, I see the business model starting to take shape. Okay, we get you in the door. So this is kind of this line up here. We get you in the door with freebies. And we've gotten millions in the door. I'm not too sure how they got the word out to that many people, but they're over there in Singapore, so perhaps they are advertising. You can imagine the population of Southeast Asia. It's very very large, um, and I don't know where their other markets are. Um, but anyway, somehow they've gotten these 3 million people in the door. You know, I don't know how they're counting that. If did somebody click once and I'm calling them a student, or are they showing up day after day after day and I'm calling them a student? That would be something else worth DD. But so I get you in the door for free, and then I try to transition you into being a paying student, and then I try to transition you into actually being a paying contributor. Now, interesting. Why would you, if you were contributing educational information, pay to do that? Shouldn't someone, usually a teacher gets paid, they don't do the paying. So I thought about that, and if I kind of, as near as I can tell, their platform is basically to, like I said, educate entrepreneurs. So I would imagine if I'm putting content on there, the hope is enough people start clicking on it, and maybe these guys are going to start giving me a cut, right? So then maybe I'm going to make money because someone's using my content and paying you for it, and so you're paying me to put my content on there. So a bit of a partnership, maybe that way. They're hosting the content, and I can get paid a little bit for it. So okay, I could understand that. But the thing is, um, when you've got uh, a model where people are sort of paying in to join, I, it would not be hard for me to describe a pyramid scheme that sounds like that. I remember when I was in college, I didn't do this, but some of my friends were back then. First off, we didn't really have cell phones yet, so told you I'm a little older. I'm in my mid 40s, um, and we didn't have cell phones, and so the thing back then was these calling cards. Kids wanted to call home, and it cost a lot of money to call long distance. And some of you are going, man, boomer. But there was this basically scheme that got hatched where, technically the business was selling phone cards, but what ended up happening is like some of my friends really weren't selling phone cards. They were just selling people joining to sell. And so like these other people would join, and then you'd get more people to join, and they'd get more people to join, and you got paid for that. And you hear how that's a pyramid scheme. So I'm just wondering here, is this legit? In no way am I making an accusation. I'm just saying I would want to do DD and understand that this feels like a legitimate business, that this isn't just there's people who got in and now they're going to recruit more people to get in so that they can recruit more people to get in. Like, that's not a real business, in my opinion. So, is there real quality content here? Maybe there is. Maybe this is great content that's teaching people how to make money. That would be fantastic. And, great. I'm glad someone could make money for that. But I'm just saying these would be the questions in my mind if I was going to invest. Okay, but let's look at actual finances. That gets a little more, quantitative, less subjective. And so I just want to share with you some things I see in their finances. First off, just the key is their expenses are growing faster than their revenues. That means their losses are getting bigger. Now, let's be fair. I mentioned they IPO'd only a year ago. Actually, not even a year ago. If you're a startup company, like let's go way back to Apple years and years and years ago. Generally, when you're a startup, you're investing in future growth, and so you've got a lot of expenses at the beginning, and you're going to hope those are going to pay off. If you believe in the leadership of a company, which by the way, if I was investing in this, I would do a lot more DD on this guy too, who's been showing up all over the place. Um, if you're investing in a company, you want to know something about the leaders, and do you trust them? Do you feel that they're wise with their finances? Do you feel that they're good investors themselves? Can they turn a dollar into more than a dollar? So right now, I'm not saying that the fact that they're losing money itself already means that they're not a good company. That's not what I'm saying. But I am saying you need to know when you're going to invest. How are they doing? So they're growing expenses faster than they're growing revenues. That to me is like, I would want to know what's the plan to turn that around, because you want the reverse, right? You want revenues growing faster than your expenses. Otherwise, your losses are just getting bigger, and we can see that. So the revenues were up 61%. That's awesome. That's huge growth. That's this line here. They went from basically $9 million to 14 and a half. Okay, they grew their revenues 61%. That's cool. But you see their operating losses, so then you got to take all this stuff out. Their operating losses went up by 145%. They more than doubled their operating losses. You can see one of the big lines here. This is called SG&A. It's basically paying your employees. So whoever they're paying, the people they've got on staff, and maybe it's even some of these contributors, I don't know. But whoever they're paying, that went up by a ton. In fact, that's almost all of their expenses here. So their cost of labor is it's not just labor. There's a few other things, but that's gone up real fast. And then their total losses is up by even more. So up by 165%, which is almost like triple the growth rate of their revenues. So their total losses are going up almost triple what their revenues are going up by. So, okay, where are you getting your cash flow? Well, I'm going to show you in a minute. They have a lot of cash. Well, when I say a lot, I mean it's $11 million of restricted cash and about $9 million of cash and equivalents. I don't know what that restricted cash is, why it's restricted, what they've got it tied up to, but it is cash. And so they have this cash, um, but uh, most of it I'm going to show you in a minute came from selling stock. So I just mentioned what's their business model, how are they generating cash? Well, almost all their cash really kind of came from the sale of stock. Again, they IPO'd. That's normal. That's how sometimes gain capital, right? A company goes public, gets all the cash, and then you're counting on them to use that cash to build a business. But there are other IPOs who come in a lot healthier than that too. So I just would want to know what's their plan to turn this around to profits. I'd want to know the clear path to that. And then another thing is you need to note there's this convertible debt. So there's this $4.2 million of convertible debt. That means there's somebody out there who owns debt on them, who can turn that into more shares. So just know that that's kind of future dilution. We've all talked about dilution a lot. So I mentioned cash from the sale of stock. So here's like the shares issued for IPO acquisition, this 27 million, and then there's convertible notes, potential conversion. It says 8.8 million. So they're getting a lot of cash from selling stock and selling essentially debt, kind of a specific instrument called a convertible note. So you just got to note that. If I go back, you can see their revenue here. So here was their revenue. So it's not that they don't have revenue. I mean, I see this $14 million, but then they had, 36 million, about $36 million from selling stock and these convertible notes. So that's where they got a lot of their money. But there's a few other things that I was thinking about. Actually, not quite there yet. So we also mentioned, okay, so what are their cash flows? You can see we already talked about their losses. So cash flows are pretty closely related to that. And you can see the net cash in operating more than doubled their losses. They're burning more than double the cash this year than they burned last year. So they lost $3 million of cash last year, 6.7 this year. So they're going to have to keep finding ways to bring cash in, or they're going to have to find a way to shut down their expenses. Otherwise, you're just burning cash, and you can't just keep selling stock forever. And remember, the CEO owns almost half of the stock. So if this thing goes up, I mean, he may want to profit. I don't know. So there's some other highlights. You can find this again in their filing. This is where I kind of got like how they had bought the that film company. You can see interesting. They kind of completed an acquisition of a U.S. university, this Antelope Valley. I'm just going to tell you right now, I don't know anything about Antelope Valley, what that is, how many students they have, all of that. But there's clearly some kind of expansion here in the U.S. because also that film company, they were based in Utah, and then this Antelope Valley is in California. So there's something going on there. And then you can see those senior convertible notes we talked about. And then you, of course, well, not of course, but maybe you've heard of, this whole task force about naked shorting and all that. You can see this was back in September, so they had kind of brought in this law group to kind of deal with this. So I want to share a few thoughts. I'm just putting this in pluses and minuses, so I guess I'm going to cover the minuses first. One thing you need to know about me, now that I'm sharing opinion. I've been here 2 years. I've seen a lot of fraud, manipulation, infiltration, people trying to influence us. I've seen countless attempts to try to discredit Adam and the executive team I can't tell you how many ways I've seen that happen. And so I've become a little bit skeptical and jaded. I'm just going to be real about that. So now you know where I'm coming from. Like, I've seen so many times where people try to distract us with other plays, try to make us feel negative about Adam, and just lead as many apes astray as they can. And so I just have a little bit of a knee jerk reaction when I see the stuff that smells the same or sounds the same as things I've seen before. So, feel free to take me with a grain of salt here. I'm giving you kind of where I'm coming from. But hey, here's some things I'm thinking about. First off, the timing is not lost on me. This thing popped up right as we have this huge options chain. It popped up yesterday on National Popcorn Day. It was really big. Obviously, takes away a lot of, let's say, focus on what could have been a celebration day for us. In the middle of when kind of great movie results are happening, and cost to borrow is just through the roof. So we're super squeezy, and right now this thing comes up. I question the timing of that. I'm going to be honest. There are other, there's one lawyer in particular, I'm not even going to name here, who I haven't necessarily seen attached to Genius, so I'm not accusing them of working with this lawyer, but, there's someone out there who, it's not my term, someone else yesterday called them the ambulance chaser of finance, and I thought that is the perfect term for this person. If you kind of research the history on them, they've been involved with a bunch of shady characters over and over and over, um, and just sort of show up kind of in a way clout chasing and selling their book, and there's no real actual track record of any results whatsoever. And then they're attached to companies that you go research these companies and you realize they're just total shells, like there's no meat on the bone. So I'm watching for that too. And then you see kind of the MO of what happens, uh, or the play, let's call it the playbook. Um, hey, why isn't Adam doing this? How come Adam's not talking about this? Adam's so terrible, blah, blah, blah. It's like, you know what? For me, I just want the guy to lead us to positive business results, and we're going to crush the shorts that way. If you want a lawsuit, be my guest, push for that, but you're not going to find me going that route. That's just not my interest. And actually really research what happened with Overstock. Some people like to push that story, and it's not anywhere near as positive as you might think it was, in my opinion. Not just opinion. You can go research what actually happened. Um, Long story short, do you want a court deciding your payout versus actually a squeeze? So I don't know. I don't feel real positive about it. Those are the negatives there. But I want to be fair because some of you are probably in this play, and maybe you're like, bro, I made a ton of money, and I had a good exit plan. Like, more power to you, honestly. If you are making money off of these runners that I do view as distractions sometimes, I'm honestly happy. If apes can win, I'm happy. What I don't want to see is retail bag holders. I don't want to see people chasing something just because they saw a tweet about it, or some CEO made some claim, and you've never even heard of him and you don't know what the company does, and then you end up bag holding. As long as you're making money, like, sweet, awesome, I'm glad for you. But most traders are not going to. But let's cover some positives just to be fair. So there is a hypothesis I've seen floating around out there. One ape in particular claimed that he kind of had insider information from, I'm not sure, somebody high up in finance, let's say, or something. Now that's definitely a trust me, bro, but it is an ape who's been around a long time. So I was willing to at least, even if it was just for fun, entertain the thought in my head. This ape was claiming that basically there's a sort of, I don't know, play going on where a whole bunch of small companies are going at the shorts real hard, and then, Adam kind of has the final blow. I don't know. That's a lot of tinfoil. It's not proven. I'm not really spending time on it, but okay, fine. Maybe Genius is one of these smaller companies that's saying we're sick of shorts. But again, I'm just like, that doesn't go with the fact that they were only 2% shorted. I'm a little confused. Someone's got to tell me, how that adds up. Um, and then, like I said, any retail win is a win. Like, if this company is going after shorts and stopping shorts, and if you're making money in that play, awesome. But I just showed you how the CEO owns almost half the company, and institutions own most of the rest, and insiders. So, is retail actually winning here? Because does retail even own this stock? So, just something to be real careful with. And some of these are reasons why you're not going to find me getting on board with, yes, let's have a lawsuit. Like, that's just not what I'm interested in any way, shape, or form. Sorry, that's just where I'm at. Here's some links. There's the 6K sort of, you can go, research the financials for yourself. Probably easier to Google it, but you could always screenshot, as I always say, but that's a heck of a lot to type in. Just Google GNS, and go, find their financial filings. and then there's a link to that revealed film. I just kind of gave you a little bit on like, because you might be like, what's a 6K? So you can see that is for a foreign issuer. So this is, like I said, a company in Singapore. It's not here. Um, you know, just finally, what I want to end with that I always end up ending with when there's all this weird stuff going on swirling around us is I just keep it simple, guys. There's more movies coming than there has been ever since pre-COVID. Um, right now, we are almost every single movie that's out in Q1 is beating forecasts. Q1 is going to be way better than even I said it was going to be. It's tracking way ahead, and if you don't know, Q1 is kind of always the lightest quarter of a year. So if this is our lightest quarter and we're kind of crushing it right now, um, go look again at what movies are coming in Q2 and Q3, and then Q4 even, and then 2024. Movies are about to have kind of a real resurgence, and I know that's weird to say because they're going really well right now, but I'm telling you, go look at Q2 and Q3 in particular, and you're going to see it's going to get a lot bigger than we even are now. And so if the industry is improving, AMC is improving, not just on admissions but on concessions. And the popcorn's coming. um, I showed you in another video how a lot of the financials have improved for AMC and are actually better post COVID than pre COVID. And the shorts are paying this insane cost to borrow. And just, there's so many things that, look at my other video I just did yesterday on kind of are we more squeezy now than when we ran to 72? The short answer is yes, but I prove that. I'll show you. Go look at it. So I just keep it simple and say, look, this is not a company, AMC is not a company going bankrupt. Shorts are burning cash to hold their position. I can wait. So I wanted to show you kind of this DD a little bit. Obviously shared some opinions today too, but in particular the financials on GNS, so you know what you're getting into if you decide you want to get into this. I encourage you to be able to explain what a business does and how they're going to make money. I know how AMC is making money, and I'm really excited about what's coming. So let's go.